Hello and welcome to Beware, a show that will, over the next few weeks, empower you with your rights as a consumer and investor and stand up to fight with you. With your help, we will also track down economic criminals who rob you of your hard-earned money. Today on Beware, we unearth a concerted attempt by many insurance distributors to take you for a ride when you buy a ULIP or unit-linked insurance plan. Over the past 5 years, more than 60,000 crore rupees has been paid by investors as commissions to agents. And in return, many have suffered huge losses as they were wrongly advised. As we discovered, rather than cracking down on this malpractice, companies seem more eager to continue paying hefty commissions. And all of it comes from your pocket. Avni Raja brings us this investigation.
1 लाख 50,000 मैंने पे किया, तो यहाँ पे मेरा अमाउंट कितना हो रहा है? 2,70,000। 3 साल के बाद इंटरेस्ट के साथ एक क्वार्टर में यूनिटी इंश्योरेंस
ULIP is a product that allows you to kill two birds with one stone. Unlike plain vanilla insurance products, ULIPs not only provide you with an insurance cover, but also give you an avenue to participate in the equity or debt market in a transparent manner. What's more, you even enjoy tax benefits under Section 80C.
But buried in the fine print and often hidden from you by insurance agents is what can make the difference between ULIPs being a wealth creator or a wealth destroyer.
To enjoy these tax benefits, ULIPs carry a 3-year lock-in. This lock-in, meant to reiterate the long-term nature of a ULIP, has only backfired. Agents sell this as a product with a 3-year investment horizon instead of a 15 to 20-year investment vehicle. The flexibility of an early exit route is often sold to you with no warning on its adverse repercussions. And as rampant mis-selling continues, agents have managed to sell ULIPs under the garb of short-term products instead of selling them the right way, a product where you make money only and only if you stay invested for the long term.
मुझे कैसा शॉर्ट टर्म फायदे के लिए देखना था थोड़ा सा ऐसा पॉलिसी में मतलब बेसिकली ऐसा है होता था
एक क्वार्टर में यूनिटी इंश्योरेंस 3 साल में वापस 2,20,000 मैंने कोर्ट से निकाला। इसलिए मैंने वापस इसे पैसे के देते तो वापस मैंने 70,000 या 1 लाख मैंने विड्रॉल किया। यहाँ पे क्या किया? 50,000 यहाँ मैंने छोड़ दिया। आफ्टर 8 लाख देंगे। अगर मैंने इसमें रेगुलर किया तो मुझे 51 लाख रेगुलर में।
आफ्टर 20 years
आफ्टर 15 years मतलब 15 साल में तो पे नहीं करूँगा। आई एम नॉट पेइंग।
अच्छा,
आई एम नॉट पेइंग।
तो मुझे फिर ये 50,000 सिर्फ पहले 3 साल के लिए पे करना है?
3 साल के लिए पे करना है। अगर 3 साल के बाद उसी में से जो इंटरेस्ट बढ़ रहा है उसी के बाद रिन्यूअल होता रहेगा।
अच्छा, तो मुझे आगे कुछ भरना ही नहीं है फिर?
नहीं भरना है।
If it is interpreted from a perspective that you can't withdraw in 3 years means you should withdraw after 3 years is actually not correct.
Mis-selling is not just restricted to the time horizon of ULIPs. With markets turning their tide, high returns have also become a key trigger for insurance agents to push the product, and sometimes even at the cost of violating regulatory norms. Insurance regulator IRDA prescribes the returns chart to reflect a maximum of 10% returns. Our agent, however, was keen to show us a chart with a whopping 35% returns.
50,000 का 2,50,000 में मेरे इंश्योरेंस में लाइफ है
हाँ
और मैंने 3 साल कंटिन्यू किया तो कितना करा मैंने 1.5 लाख बनाया 1,50,000 मैंने पे किया 1,50,000 का ये होगा
मतलब मुझे ईयरली 50,000 पे करना है
अब ना सर 70,000 you want to invest
मतलब 50,000 ईयरली
50,000 इन्वेस्ट करना है ना
ईयर
50,000 का ये बता रहे हो 1,50,000 मैंने पे किया तो यहाँ पे मेरा अमाउंट कितना हो रहा है 2,70,000 3 साल के बाद इंटरेस्ट के साथ
2,70,000 होगा मेरा मतलब 1,50,000 का
हाँ
Another agent, although stuck to the IRDA guidelines, pushed the product with a guarantee of more than 10% returns.
And what kind of returns will I get after 3 years?
I will make a worksheet where I will show you returns based on 6% and 10% because that is decided by IRDA.
Right.
Okay.
Right.
That minimum I have to give, show 6% return, maximum I have to show 10% return.
Okay.
But currently stock market is going very much high.
Yeah.
So you will definitely get more than 10% return if you put into
Equity. Okay.
I think somewhere in the last 3 years, our industry went too much into reliance on the ULIPs. A long-term product became to some extent a short-term product. And as an industry, I think we didn't do enough in ensuring that the policies continue in the system.
But why would an insurance agent missell ULIPs and sell them as a 3-year product? Well, the answer to that is very simple. An insurance agent gets most of his commission only in the first year.
ULIPs are front-loaded, and first-year charges can range anywhere from 10% to 60% and even 100% in some cases. This means that for every 100 rupees premium that you pay, up to 60 rupees could be deducted, and in some cases, even the entire 100 rupees could be taken away as charges for the first year.
It's a double whammy for investors. While on the one hand, mis-selling continues, on the other, persistency rates in the Indian insurance market are extremely low. This means that a lot of policies are not being renewed. Experts blame it on high commissions and charge structures, because of which the investment corpus shrinks significantly, pushing investors to move out. In the process, the agent has already made his money, and the policyholder, that is you, becomes the victim.
A survey conducted by IRDA reveals that between 2005 and 2007, lapsation rates across companies ranged between 7% and 35%. This means that for every 100 policies sold, there could be as many as 35 policies where the policyholder stops paying the premium, causing the policy to lapse.
On the persistency or the lapsation, I think these figures are not really declared on a regular basis. Every month, when we come out with new business, we also need to come out with renewal premiums. So it put things in perspective. And there is a tremendous amount of, I would say, requirement or need for us to declare the persistency and renewal premium.
Even if you withdraw part of your investment after 3 years, your insurance cover will continue to exist. Your insurance agent will promise you this attractive option. But what he doesn't tell you is that you are worse off if you withdraw in only 3 years, as even though you retain your insurance cover, your investments hardly make any money.
3 साल के बाद मुझे मतलब 3 लाख मैंने इन्वेस्ट किया तो 4.5 मिल जाएगा
5.5 आदमी मिल जाएगा 3 साल के बाद what is your suggestion? Don't withdraw 100% amount. You keep 30,000 balance in this policy. So 5.5 lakh है 4,95,000 you can just withdraw. Why I'm saying you keep 30,000 this? If you keep minimum amount of premium in your policy, this cover will be for you for your whole life. 3 साल रखी है, ओके 3 साल के बाद आपका 5.5 लाख रुपया है अपन तो आप 5.5 लाख रुपया विड्रॉ कर दो आप how much you are getting somewhere 2,20,000 you are getting
मतलब 3 साल का काफी रिटर्न है वो अच्छा
और अपना 3 साल का टैक्स सेविंग हो जाएगा अन्य वो गवर्नमेंट को टैक्स पे करने से अच्छा 1 लाख आई एम सेइंग मैं 1 लाख रुपये ऑफ टैक्स just pay what's your short duration and say you want to withdraw, you withdraw.
What really happens in the process is a huge dent on your investment. Let's take an example. If you paid a premium of 1 lakh rupees for a ULIP with an 18% allocation charge and a 2.25% fund management charge in the first year, 20,250 rupees is deducted as the charges. So it is only the remaining 79,750 rupees that is actually invested and not the entire 1 lakh. So in such a case, how much would you end up with at the end of the 3-year period? Assuming a 6% interest rate on the yearly premium of 1 lakh rupees, your total fund value at the end of the 3rd year would be about 2,83,000 rupees, which in effect means that you would have lost 17,000 rupees by the end of the 3rd year.
And that's not all. There are at least 8 insurance companies that offer products with a 0% allocation in the first year. But do products like these add any value to your portfolio? And what are the regulators doing about the suffering investors? We tell you after this break. Keep watching Beware.